What's going on, everyone? Sid Misra here, financial advisor for Beacon Financial Group. Hope you're doing well. Again, October is financial planning month, and I wanted to do another video on the financial planning process. I talked briefly in my first two videos about doing an audit of your own finances, as well as in the second video, setting goals. And those goals have to be realistic, and they also have to be prioritized as well. So the next part of the process is actually doing the planning, right? How do you get from where you currently are to where you want to be? So a good financial plan is going to obviously factor in where you currently are, right? Your current financial standing, your goals that are prioritized and realistic. It's also going to factor in your risk tolerance, your time frame, taxes, whether you want to leave any sort of legacy to your heirs, among some other things. So it has to encompass all of those parts of the process. One of the most common questions we get is, how much do I actually need for retirement? And that's where the plan obviously comes into play. So if we're looking at what your expenses are, what you actually need, what is that yearly amount of salary or income that you need to live comfortably, right? And if your retirement is, let's say, 25, 30 years away, how much is that amount going to be in the future when you factor in inflation, right? We know that the purchasing power of a dollar goes down every year. Whatever you need now is actually going to be a larger amount going into the future to have the same purchasing power. So that's one of the things that we have to factor in as well. Where are you going to get this income from? What are your sources of income? Do you have pensions? Do you have retirement plans that you've been, contributing to consistently? Are you going to use Social Security? Most likely. And how much is that going to provide you? Do you have any other investment accounts, anything of value that generates income for you? These are all the things that need to be taken into consideration. For your income sources, how are they invested? What are the rate of returns or the gains that you're going to be getting over that period of time? Obviously, no one has a crystal ball, but you don't want to be too conservative, because for a lot of people, retirement is 20, 25, 30 years. You don't want to be too conservative and run out of money. So you have your income sources, they're invested correctly. Now, when you're retired, how are you going to draw that down? How are you withdrawing that money to make sure that you don't run out of it? How do you draw it down to make sure it's tax efficient, you're not paying more than you have to? These are all important questions that you need to be answering. And if you can't actually answer them on your own, it's going to be imperative that you ask for help. You have to seek help. Figure out a way, do the research online, find a financial professional that can actually help you answer these questions, because it is your retirement and these are the questions that you need to answer. Now, this is very important. If you decide to work with a professional and they don't take into account where you currently are financially, what your goals are, if they don't ask you about these things, what's important to you as a person and what you want out of your retirement, and they just come to you, with products or recommendations on investments, things like that, get out of there. An actual financial advisor, someone who's a fiduciary, who has your best interests at heart, needs to know these things before they make any recommendations. The people that don't ask those questions and then make a recommendation on a product or an investment, they're salespeople. Run as fast as you can. The planning process is extremely important because it gets you from point A to point B. Don't forget it.